Welcome to this video, which is all about Forex trading lessons for beginners. Now, what we're going to be doing today is getting 10 key tips for trading success from one of the greatest traders of all time. His name is Michael Marcus. Now, in terms of the 10 tips, I'm going to summarize them in a moment and also do my favorite quotes from Michael Marcus as well. But before we get there, who was he? Well, he was featured in the book Market Wizards, edited by Jack Schwager. Now, that is an essential book for any serious trader to read. Not only do you get the Marcus interview, but also interviews with some of the top traders of all time. There's something you can learn from all of them, so I strongly recommend you go and read that book if you hadn't. Now, in terms of track record, Marcus can be seen as one of the most successful traders in the book. He turned a $30,000 account into $20 million in just 10 years. No year did he make less than 100%. And I think his best year was just over 300%. So a really fantastic track record. Now, in terms of a lot of beginners who come into the markets, they don't really realise the basics that are really needed to achieve trading success. I think in the 10 tips coming up, you get the really key basics that if you learn them, understand the tips, practice them, you can achieve consistent gains in the Forex market. So let's have a quick look at the 10 tips and then we'll be moving on to the quotes. But 10 tips first of all. Okay, here are the 10 key trading tips I picked out from Michael Marcus. First one, losses and learning from mistakes. Now, despite his huge success trading, his first few years were not successful at all. Basically managed to wipe out his trading capital several times. He borrowed money from his friends. He managed to wipe that out. He even borrowed money from his mother. And he lost that as well. Now, he ended up on tranquilizers and he actually collapsed with the stress. Now, he did actually change his trading around, of course, and he says that basically 3 key mistakes he made were the 3 key mistakes that most beginners coming in the markets make, which is to risk too much per trade, to trade too often, and to enjoy trading, the thrill and excitement of it, which meant he traded too much. Now, those 3 mistakes, one or all of them, are made by beginners. You've obviously got to be patient, only wait for high odds trades, not risk too much per trade that you risk wiping out your account, and also you mustn't enjoy trading or feel excitement or a thrill. You've got to be cold, calm and calculated in your decision making. The actual excitement comes later if your trade makes money. Now, in terms of point 2, he makes the point about mental capital. You don't just have financial capital, you have mental capital as well. As your financial capital goes down, so does your mental capital. And what he means by this is you start to lose confidence when you're in a period of drawdown. You want to second guess your system. You may have an inability to pull the trigger. You just never think the losing streak is going to end. He's saying in these times you must cut back your trading size and try and get back slowly. If you try too quickly, you'll dig yourself a bigger hole. And if you're getting too stressed out or you're feeling really unconfident, just pack up for a few weeks or however long it takes and then come back later when you're mentally refreshed. Now, in terms of risk per trade, he says you can risk 5% per trade, which is more than conventional wisdom at 2%, but I think 5% is a good figure. He also makes the point, if in doubt on any trade, get out. Doesn't matter if it's a small profit or a small loss. If you've ever got a doubt about the trade, get out of it, go flat, and you can always get back in. You see the market much more objectively from outside. Now, he also talks about learning from Ed Seykota. Now, Ed Seykota at the time was one of the most successful traders around, and Marcus was working in his office and basically still losing money. The trader said, well, why didn't you just copy Ed Seykota's trades? He was giving them to you. And Marcus said, I just couldn't do that. All traders have to find their own way of doing things, something they're comfortable with. And it's very true. And he says, there is the myth that experts can help you. No one can help you. You've got to find a trading style that suits you. You've got to have conviction about the trades you're doing. If you're doing someone else's trade, you'll never have conviction about it. And he was saying that in terms of Ed Skota, he learnt about cutting losers and running winning trades. Now, in terms of cutting losers, Ed Skota, fantastic money management. But key point Marcus made about Skota was that he could just run winning trades. He was using a purely technical system, and he was saying just, Skota was never panicked out of a trade. He seemed to be able to hold it forever. And Marcus was saying, cutting losers, of course, is important. But you've got to run your winning trades to cover your losers. It's a fact that if you look at retail trading accounts, overall they've probably got about a 50% success rate, but most beginners' accounts are wiped out. Why? Because they can't run their winners. And this is a key point for Marcus. He's saying you've got to be able to hold your winners. Skota could do it just purely technically. He couldn't. Marcus said, I have to use the big fundamentals, the technicals and the sentiment together, and then I can hold my winners. So he found his own way of doing it. Now he's saying also, point 6, markets constantly change, but they remain the same. He was saying markets are constantly changing, and he was noting a change at the time in the markets, which was becoming much harder to trend follow, because big blocks of money were coming in the markets, having the same information at the same time. Big institutions, they'd react the same to the news. The breakout would occur, then it would suddenly fail back. That is truer today, because with the internet, so even small traders have got the news at the click of a mouse. You get big blocks of money coming in, and then obviously most breakouts failing. You've got much more choppy conditions today. You can't long-term trend follow just purely technically like Skota did in those days. You can only do it really with the fundamentals behind you. So you don't have such smooth trends as you used to. Now the markets will probably change again, but as Marcus is saying, they do remain the same in one respect, and that one respect is that the market price is just a pure reflection of human psychology. All markets are the same. They're driven by greed, fear, human emotion. So it's a psychology game, working out the psychology of the participants. Point 7, has the market discounted your idea? In basically a world of instant communications where the news is available to everyone, you have to be very careful in considering has the market actually discounted that in the price. I think a lot of traders, they read the experts in the news, try and trade them. Of course, it's a futile exercise. The news is out, it's discounted, and they lose money. So think very carefully about that. Point 8, objectivity, openness and acceptance of the truth. When asked what makes a great trader, Marcus was saying, someone who is very objective and open to anything. And he actually taught one of the great traders of all time, a guy called Bruce Covenor. Bruce Covenor was saying that he took that on board, and he would always construct alternative scenarios. If the market had one scenario of what happened, he'd be very objective, sit back and say, what could be the alternative scenario? And acceptance of the truth. Truth is the reality. And Mark's saying, he could accept a lot of things that happen in the markets, even if he didn't actually agree with them. He knew they were the truth. Okay. 9, courage and the importance of gut feel. Courage, very important in my view, in terms of the courage to try, the courage to fail, the courage to win. And in terms of courage, I think that only comes when you're trading. If you're trading capital that means something to you, you're going to feel hurt if you lose a bit. In terms of a lot of traders, they don't trade with that feeling. The money doesn't matter. Well, if the money doesn't matter, you are going to lose it. Okay. Always, when you are trading, risk a meaningful amount. Okay. In terms of the importance of gut feel, is saying every great trader has gut feel. They do. Comes from experience. You have to go through the learning curve to get it. But there isn't a great trader that doesn't have that inner conviction about certain trades. Only comes from experience. You have to go through the learning curve. Point 10. Forex success can be learnt, but results will vary. They will. Everyone will find a level of success for them. There's no sort of average, so to speak. Okay. Marcus makes the point that anyone can learn to be a competent trader, but in terms of the great traders, there is something that separates them out from the rest, which is unexplained, which is true in many other areas of life, be it footballers or great businessmen or whatever. But the good news is you can learn to trade, and you can learn to trade successfully. So there are my 10 tips I picked out from Michael Marcus. I'll go back up to that short summary there of 10 tips I picked out from Michael Marcus for trading success. Now, he did say something else in the interview with Jack Schwager, which I thought neatly sums up what trading is all about. He said trading requires an intense personal involvement. And what he was saying really is that it does. It's one of those businesses where no one can actually help you. You're very much on your own. Okay, you've got a strategy, okay, but you've also got to apply that strategy, with discipline, the right psychology and so forth. That only comes from within. Now that might sound daunting to some people who maybe haven't traded who are watching this video. Don't be daunted by that, because that is the very reason you can win. Because most traders don't see it that way. They see, strategy is more important, or they see experts that they can perhaps copy and so forth. They don't want to stand on their own. If you want to stand on your own, you make the personal commitment, you do your homework, you realise how important our psychology is, and also you've got a sound strategy. In time, you will learn to become a competent trader. Now, I can't tell you how much you will earn, because obviously, like Marcus says, it is very variable. Everyone will find their own level of success, but trading is a learned skill, and anyone can learn to trade successfully. Now, what I'm going to do now is just finish up with 10 quotes from Michael Marcus, which cover some of the tips I've just discussed and some I didn't. So, play out the 10 quotes. Hope you enjoyed the video as per usual. Take care. Have a good day.